Hey everyone, welcome back. Today, we're talking about something that affects almost everyone, income tax. Understanding income tax is super important and can actually save you a lot of money in the long run. Plus, there's a lot of confusion and myths out there about income tax, so we're here to help clear things up. First off, let's start with the basics. What is income tax? Well, income tax is a tax that governments impose on individuals and businesses based on their income. So, whether you have a part-time job, a full-time job, or even run your own business, you're likely going to be paying some form of income tax. You might be wondering, why do we even have to pay income tax? Good question. The money collected from income taxes is used to fund various public services and infrastructure. Think about roads, schools, hospitals, and even the police and fire departments. All these services are funded by the taxes we pay. So, in a way, paying income tax is a way of contributing to the community and ensuring that we have these essential services available. Now, let's talk about how income tax works. Basically, the amount of income tax you pay depends on how much money you earn. Most countries have a progressive tax system, which means that the more you earn, the higher percentage of your income you pay in taxes. This is designed to ensure that those who have the ability to pay more do so, and help support those who may not earn as much. To calculate your income tax, you first need to determine your taxable income. This is your total income from all sources, minus any deductions or exemptions you're eligible for. Deductions are expenses that can be subtracted from your total income to reduce your taxable income. Common deductions include things like mortgage interest, student loan interest, and contributions to retirement accounts. Speaking of deductions, let's talk about those for a moment. Deductions can really help lower your taxable income and, therefore, the amount of tax you owe. For example, if you're a student, you might be able to deduct the interest you pay on your student loans. Or, if you contribute to a retirement account, like a 401k or IRA, you can often deduct those contributions from your taxable income. It's important to keep track of these deductions throughout the year, so you can take full advantage of them when it's time to file your taxes. In addition to deductions, there are also tax credits. Tax credits are a bit different from deductions because they directly reduce the amount of tax you owe, rather than reducing your taxable income. Some common tax credits include the Earned Income Tax Credit, which is designed to help low to moderate income workers, and the Child Tax Credit, which provides a credit for each dependent child. Alright, so we've talked about deductions and credits, but what about tax brackets? Tax brackets are the different income ranges that are taxed at different rates. For example, in the United States, there are currently 7 federal tax brackets, ranging from 10% to 37%. So, if your taxable income falls within a certain range, you'll pay that percentage on that portion of your income. Also, keep in mind that there are different filing statuses, such as single, married filing jointly, married filing separately, and head of household. Each of these has different tax brackets and can affect the amount of tax you owe. So, it's important to choose the correct filing status when you file your taxes. And let's not forget about state and local taxes. In addition to federal income tax, many states and even some cities have their own income taxes. These vary widely depending on where you live. Some states have a flat tax rate, while others have their own progressive tax system. And there are a few states that don't have any income tax at all, like Texas and Florida. So, how do you actually pay your income tax? Well, if you're an employee, your employer will typically withhold taxes from your paycheck throughout the year and send that money to the government on your behalf. This is called withholding, and you'll see it on your pay stub. At the end of the year, you'll receive a W-2 form from your employer, which shows how much you earned and how much was withheld for taxes. If you're self-employed or have other sources of income that aren't subject to withholding, you may need to make estimated tax payments throughout the year. These are quarterly payments that you make directly to the government to cover your tax liability. This is to ensure that you don't end up owing a large amount of tax at the end of the year. Now, let's talk about filing your taxes. Every year, you need to file a tax return to report your income, deductions, and credits to the government. This is usually done using IRS Form 1040 in the United States, but there are different forms for different situations. Your tax return will calculate your total tax liability and compare it to the amount of tax you've already paid through withholding or estimated payments. If you've paid too much, you'll get a refund. If you haven't paid enough, you'll owe the difference. Filing your taxes can be a bit daunting, but there are plenty of resources available to help. There are tax preparation software programs that can guide you through the process, and there are also professional tax preparers who can help if you have a more complex situation. The key is to start early and stay organized. Keep all your important documents, like W-2s, 1099s, and receipts for deductions in one place, so you have everything you need when it's time to file. So then, what happens if you don't pay your taxes? Well, it's not something you want to mess around with. The IRS can impose penalties and interest on any unpaid taxes, and in serious cases, they can even take legal action against you. It's always best to file your taxes on time and pay any taxes you owe to avoid these issues. Another thing to consider is tax planning. This is the process of looking ahead and making financial decisions with your tax situation in mind. For example, you might choose to contribute more to your retirement account to take advantage of the tax deduction, or you might plan your charitable giving to maximize your tax benefits. Tax planning can help you minimize your tax liability and keep more of your hard-earned money. And speaking of retirement accounts, let's touch on those for a moment. There are several types of retirement accounts that offer tax advantages, like the 401k and IRA. Contributions to these accounts are often tax deductible, and the money in the account grows tax-free until you withdraw it in retirement. This can be a great way to save for the future while also reducing your current tax bill. Now, I know we've covered a lot of ground, but it's important to remember that everyone's tax situation is different. There are many factors that can affect your taxes, like your income, filing status, deductions, credits, and even where you live. It's always a good idea to consult with a tax professional if you have any questions or need help with your taxes. In addition to that, keep in mind that tax laws change frequently. What might be true this year could change next year, so it's important to stay informed about any changes that could affect your taxes. The IRS website is a great resource for the latest information, and there are many other websites and tools available to help you stay up to date. Alright, so what's the takeaway here? Understanding income tax is crucial for managing your finances and ensuring that you're paying the right amount of tax. It's not always the most exciting topic, but it's definitely one of the most important. By staying informed and taking advantage of deductions and credits, you can minimize your tax liability and keep more of your money in your pocket. So then, if you have any questions or want to share your own experiences with income tax, drop a comment below. I love hearing from you and learning about your experiences. Remember, paying taxes is a part of life, but with the right knowledge and preparation, it doesn't have to be a burden. See you next time.